Alright guys, I'm back. I have no idea what the hell happened. But as usual, YouTube messing around. Everything seems to be fine for some odd reason. Um, I don't know, just the stream just died out. I have no idea why, what all of this means. Yeah, it's stupid. But anyway, listen guys, I'm back. So if you're back on the stream, welcome back. Because I was trying to answer some question for one of the viewers, and I believe they're a new viewer, or maybe not. But regardless, I was trying to answer this question for them, and yeah, not sure what happens. Hold on, let me just try and message everybody. Yeah, this was kind of nasty. Not happy at all. So all right, I see one person back here. Awesome. Thank you very much for coming back. So I was trying to answer a question. Brother was asking like when to take, when to do this, and when to do whatever, or TA and this and that. So those are a few bits and bobs there. I don't know what the last question was, but let me just answer this as much as I can. So I'm not one of those guys who claims to be this or that. No, that's not my goal here. I'm here to make you understand how the market works in the most basic form possible. I'm not here to show you technicals that are my little secrets. I'm here to show you technicals that you can replicate. So if you call me a TA and you are able to replicate what I can do, aren't we all the same? That's the argument I have. So for me, I believe everybody should be able to do basic technicals, and everybody can be a TA. You know, nothing special here. I don't want a title to say I'm the TA, if that makes sense. That's that. Of course, when it comes to market highs, market lows, market tops, we use certain metrics to guide us and tell us where we need to go. So that's what I'm using. I'm using a metric to show us where we need to go. And you know, for me, if I see these levels here, I know how to stay calm and observe the lines, because remember, the curves are there. That's fine. So you see your prices, you see everything. That's all fine. But the Fibonacci lines are also very important. These are also important levels that we need to understand. So we might get rejected with the Fibonacci levels, because remember, once we have a brand new all-time high, if I take this off, there's nothing. So what do we trade or calculate against? We have nothing in this area. There's absolutely empty space here. Nothing, just pure empty space. So in order for us to keep calm and understand how these empty spaces are going to work, we would obviously start triggering our Fibonacci's, right, and use those Fibonacci levels to give us the prices. So I'm sure you saw, like I mentioned, the 89. You can see the Fibonacci is giving us a 90k here as well. So that's how we know the Fibonacci levels are also very important for us to be bullish or not, because any one of these lines could be a rejection point. Yeah. So I hope that kind of makes sense, right? You can see how the correlation is between this level and this level here, right? You can see how the correlation is between this level and this level here. So it's very important you understand that the Fibonacci lines are powerful tools that will also tell us where the market goes. Now, when you're talking about to buy or to sell, I always say to people, whenever we're down here, whenever the market is bloody, anytime we come to these zones here is always a great time to buy. If you're a long-term holder and you want to buy for the next 5 years, you're an investor and you say I want to invest for the next 5 years, then anywhere below this blue line or aqua line is your best area to buy. It's very simple. Anywhere in this half of this log chart is a good area to buy, hold for the next 5 years. Don't look at the price. You want to be a strategic investor, you buy anywhere on top of this white line and under this greenish line here. So this area here is your best zone to buy as much as you can, and then just wait for the market to come back to either the median line, obviously do a top. Normally it will come back to the median line. That's where you should be taking your profits. And that's it. Great investment. You know, of course, whenever we move above the line, that's when market is hot, because now we're uncertain. We don't know what we're going to do. We don't know how high we're going to go. We don't know where the top is going to be. Also, one other fact to remember is this log chart, this top line is not an absolute. Neither is this bottom line. It's not an absolute. this top line could be down here tomorrow or could be up there. This is just a rough estimation of where it is, because remember it's a log curve chart, right? So it's a growth curve. That means that the curve could easily be like this, right? Or on the bottom it could easily be like this. It doesn't matter, it's a growth curve. That's what it is. So what we're saying is currently our curve was like this. Nothing stopping us from having this curve coming here and then doing this. Nothing stopping us. Please do understand this. So these are powerful stuff. You have to understand. That's the reason why you don't go nuts on certain things, because these are all resistance bands. Every one of them is a resistance level. So please do understand. No, you're welcome, bro. You're welcome for coming back as well. I don't think other people clocked on that I'm still here. But no, I just came back straight away because obviously the stream died. Also, KI, if you can do me a favor, share the link to the Discord that I'm live there on the second stream, just in case. So I just wanted to explain this. When you're talking about percentage, how much you should take, how much you should make, there's only one rule that I follow. Whatever money you invest, 100% should be taken off the table as soon as possible. That's your money. That's the money you gambled. That's the money you put in. So that's the money you should take. I see Mark Pitter here. Awesome, Mark. Thank you for coming back, my brother. So I hope you watch this second part from the beginning, because I did restart it straight away and I did try and explain as much as possible. So when you're talking about how much percentage of certain things, I'm not quite sure if you're planning to invest into them now, or if you have already invested and you're planning to take out profits. I always say to people, when the market tops out, everything will top out. And if you have a liquid portfolio, so please understand this, there's 3 portfolios I personally choose. I have what's known as a huddling portfolio, means I will never ever touch that for another 10 years. Okay, so that's my huddling portfolio. And I'll explain how that works in a bit. I have a trading portfolio where I only do leverage trading. I do not do any other trading at all. That's my leverage trading portfolio. Then I have a liquid portfolio. That is my spot trading. That's where I would buy, sell the top, buy the dips, do whatever. That's my liquid portfolio. Now, my liquid portfolio, my initial investment is all I care about. As long as my initial investment is out, I'm good. Now, it doesn't matter whether I've taken my initial investment out here or I've taken it here. It doesn't matter. My initial investment for my liquid portfolio has to remain in cash. That's the target. Now, if it takes me 6 months to a year or 2 years, it doesn't matter. Okay, I always keep my liquid portfolio free to buy the dips. Now, that's liquid portfolio. My trading portfolio is where I do my risk management. That means I will trade a specific percentage of that and maybe do 100x or 50x or 5x. I don't recommend more than 2x. However, if you're brave enough, I do sometimes as well. I do 10x and 20x trades, and I have lost a lot of money. Okay, so there's no point talking about those. But those are high leverage trades, which I would do with a very small portion of my portfolio. Then comes my hodling portfolio, and that's the best portfolio I have. So what I do is, if I make some spare money, like for example, I put $100 and I made $120 with my spot, I keep the $10 and I put $10 in my holding portfolio. So I split the profit. Same applies when I do leverage trade. If I've put, say, 1 BTC and made 2 BTC, I'll put half a BTC in my hodling portfolio. I'll take half of it, leave it as my increase my trading portfolio, if that makes sense. Because I don't want to keep 100% there. I want to always stash some for the future or whatever, for a rainy day, and that goes into my hodling portfolio, which I don't touch. So any profits I make, I always split them. That's my way of managing my portfolio, managing my income, and saying, okay, I've always got something to fall back to. So I could have played this entire market. If I lose it all, I've still got something to come back to as my hodling portfolio. So I hope this kind of makes sense. I see Leonardo Wong here. Awesome. Thank you very much. Leandro Wong. Leandro, sorry for mispronouncing your name. Leandro Wong. Absolutely, I believe you're on fire. Everybody's on fire. Thank you very much for that. But that's what the situation is, right? So as I said, everybody that is able to copy what I did here or take a screenshot here, you're a TA as much as I am. I'm not going to show you anything crazy here. I'm not going to suddenly just pop up with a chart and say, this is my little thing. No, guys, I don't do that. I'm the type of guy who has a premium account, but I show this free account. I say, guys, use the free account. You can do this. So you're saying you're already invested. That's great. So, Mark, my advice to you is, and depends how you take it. And I'm not a financial advisor, obviously, but anything you want to do, when you go to the top of the market, decide whether you're on a liquid portfolio or a hodling portfolio. If you're hodling, it doesn't matter whether it goes here or whether it comes back here. It doesn't matter. That's your hodling portfolio. That's a different story. And I'm assuming you're talking about your liquid portfolio or your trading portfolio. Well, trading portfolio, you should always move your stop loss as the price increases or decreases, depending if you're long or short. So your stop loss should always account for some profit. So you always take some profit and you never lose out. So you start off, for example, I'll give you a good example here. Let's get rid of all of this. Let's also get rid of this. I'm going to do some nice little drawings here. So for example, you opened a short. I'm just going to say you opened a short. How about this? So you said, I'm going to short the market. Market goes down, Your stop loss should be just above where you did that. That would be your risk management, obviously. Now, market's doing what you want to do. It's in favor to you. Your stop loss should always start moving as well. So that means if the market reverses, you are stopped out here, but you've got all of this as your profit. Same applies when the market is moving up, right? So now the market is moving up. You've entered a trade here. Your stop loss is here. The market's now doing this. It's all great. Your stop loss should also move up along with it. So when the market decides to reverse back, you are cancelled out, but you've got to keep all of this profit to yourself. That's how you should be trading responsibly, and that's how you're going to keep your money and your profits. So that's very powerful. When we're talking about spot and you're invested in spot, you're not a trader, absolutely fine. You should be trying to take your initial out as soon as you can, and depends on your level. So you've come in and you've said, okay, like you asked me, you said, Sham, what do you think the total price for this market cycle could be? And I say, I take this area here. I just take this Fibonacci to this Fibonacci, and I say, well, looking at this right now, BTC looks like it's going to go and hit the $76,000 level. Just for the sake of, just an example, you calculate how much profit you're going to make from this zone that we calculated to this zone, and it says a 58%. You can now do one of two things: take 50% off, right, off the table, because you want to taking profits. You can always like average up, so you can take a bit by bit off. You know what I mean? If that makes sense. You can always take profit on the way up. That doesn't matter, but the key is to get your initial back, not your profit. I'm the only person who probably says don't take your profit. Make money. If you made $100 into 1,000, take your 100, not the 1,000, and let the 1,000 grow. Mark says, is it better to take profits on Sol, ADA, BTC, ETC, pull it out, wait for the market correction and jump back in for the next 5 years? Absolutely, my brother, absolutely. So Mark Pitty just said, like, is it okay to take the profits out when the top? Yes, that's exactly what I'm doing, and I've mentioned it on many of my videos, and this is one of the reasons why. I'm not sure if you can see this. Let me see why you can't see this. Maybe you can't see what I'm seeing. Let me go here. Let me try and see. That will definitely make you see this, right? I think it will make everything so much more clear. And also, let me change the color here. This would make everything so much more clear for you. Now you're going to be able to understand exactly what all of this means. Mark, this one's for you. And I think other people already know. Some of the guys have spoken to me directly on Discord. They already know what my strategy is. I'm waiting for this red line, not this white line. I don't care how high it goes. This is my exit. And what I'm planning to do is exit 50% of my total liquid asset. 50% of my total liquid asset up to here. Now, let me just give you a rough example of what my total liquid asset means for me. I'm going to leave out the fact when I entered. I'll just say from 2020, right? Because I entered before, I entered in 2019, but I'll just say what that means for me. So let's just do it from here. Or actually, just do it from here. Let's just be a little bit unfair with myself and do it from here. If I come to this red line, that's 879% for me, almost close to 900% for me. And at that time, all I'm planning to do is take 50% of my total profits off the market, giving it a chance to climb up even further. Now, if it does climb up even further, good luck to my other 50%, which then can potentially go from here to here. Where is it? So my next 50% that I have remaining, if it does climb up a little bit more up to this line, potentially do another 20, 30, 100% or whatever, it doesn't matter. But this red line is my exit